All right, Lifo perpetual method. So this is a good one because unlike FIFO, there is going to be a difference between using the periodic method and the perpetual method for calculating either ending inventory or cost of goods sold. So let's get after it. Betco had the beginning inventory of trees in the amount of 10 trees at a cost of $50 per tree. Beck had the following additional information for the current year. So this is a schedule showing all the trees purchased and sold throughout the period. What was Beck's cost of goods sold using the last in, first out Lifo perpetual method? So we're looking first and foremost for our cost of goods sold. So once again, I do just want to emphasize this for going forward. FIFO, if we're using the FIFO method, regardless of the fact that we're using periodic or perpetual, we're going to come out with the same ending inventory and cost of goods sold. So it doesn't matter if we are using perpetual versus periodic. But if we're using Lifo, it is important that we know the difference because the perpetual method is going to result in different amounts from the periodic method. For those of you note takers, I would suggest that you guys write this down because the periodic method is certainly easier to calculate than the perpetual method. It's a little bit easier to remember. So if you're seeing a FIFO type question, I would make sure that you know that you understand that you can use the periodic method and still come out with the same result. So I would write this down for those of you, like I said, who are note takers. So when I'm either doing so regardless of whether or not you're doing a FIFO or a Lifo type question, what I recommend you do is go down the line and calculate the cost of goods available for sale, and then go through and figure out what the company's cost of goods sold and ending inventory balances are. It's just easier to do it that way, and you're more likely to not make a mistake. So on the actual exam, you guys are going to get a little piece of paper. It's not a piece of paper anymore. I guess it's more like a whiteboard to an extent, but you're going to be able to take notes and handwrite out some of these calculations. So there's really no excuse to, not write this stuff out as you're going through it. There's no need for mental math on the CPA exam. So I recommend doing a little schedule like this. So we had a beginning inventory balance of 10 trees at $50 per tree. Cost of goods available for sale is thus going to be $500. The 6 trees that we purchased at $55 per tree, that's $330 available for sale from that inventory. On March 20th, we purchased 9 trees at $60 a tree, so that's going to be $540. And finally, on March 30th, we purchased another 4 trees at $65 per tree, so that is going to be $260. So we have a total of our cost of goods available for sale for $1,630. All right, so now we can calculate Beck's cost of goods sold using the perpetual last in, first out method. So we could go through each sale and attribute the cost. So for Lifo, we are going to go down the line and attribute each sale to the latest acquired inventory item. So of our 8 trees that were purchased or sold rather at $100 per tree, we are going to attribute the first 6 of those trees to the 6 trees that were acquired for $55. And why is that? Because they are going to be the most recent purchases. So therefore, the entire amount of this $330 is going to be attributed to our cost of goods sold. So what about the next or the last 2 items from our 8 trees? Well, those are going to come from our second most recent purchase, which is going to be the beginning inventory. So our entire 6 trees are washed out, they're expired, we used them all, we sold them all, so now we're going to be taking the inventories from our second most recent purchase, which is going to be the 10 trees that were purchased for $50, so the remaining 2 trees at $50 is going to be cost of goods sold of $100. All right, so we purchased another 9 trees at $60, and then we sold the 7 trees at $105. So this is going to be the next sale. What are we going to attribute this inventory to? So of the 7 trees that were sold, they're all going to be attributed to this 9 tree amount that was purchased at $60. So it's going to be 7 trees at $60 per tree. That is going to give us $420 from the cost of goods sold from those trees. And basically that is going to be the total amount of our trees that were sold. So our cost of goods sold is going to equal what? 100 plus 300 plus 420. The answer is going to be $850.